Wow, what a week it was last week. We saw the S&P 500 up 9.5% on Wednesday on the announcement that Trump was pausing the tariffs for 90 days on most countries. Now, there were some exceptions, of course, and a lot of tariffs did remain in place, especially in different sectors. Now, why was Trump forced into doing that? Like, why did Trump have to actually all of a sudden fold and put out a 90-day exemption? According to him, it was that countries were getting yippy and afraid. But it really was the bond market that really forced Trump to do what he had to do. What we saw was, during last week, we saw the yield on the 10-year Treasury note moving higher in a risk-off environment. That's not normal. So typically when the stock market heads lower quickly, investors rotate from stocks into bonds and yields head lower. That didn't happen last week. And Trump I think really does want to lower US dollar. He says he doesn't, but I think he does. But the one thing he can't have is a higher interest rate on the 10-year yield and other interest rates as well. We have a lot of government debt coming due very shortly in the US. What Yellen did was, typically 15% of the US government debt is over the next 2 years. That's been the standard. Yellen, in order to juice the markets, increased that amount to 30% of US government debt coming due. This is huge. It's quite scary, actually. It's quite, I think, irresponsible what she did, but there could have been other reasons. But it's a big problem for the Trump administration. And if they have higher interest rates, they're going to be in trouble with this. So they need to have lower interest rates. And with the interest rates moving higher, that was not a good sign. Trump had to step in and make some sort of concession to stop this from going on. So why did the yields move higher? Well, no one really knows because it's just been really over a few days here and the data really hasn't rolled out yet. But lots of different theories. I think it was really a confluence of different events taking place. First of all, America has been in this agreement with countries around the world, including China, and saying, we'll buy your goods. You take those US dollars, turn around, and buy our US treasuries. Well, if the US puts tariffs on, that means they're not going to sell as many goods to us, so they don't have as many US dollars to buy the US treasuries. So the US actually broke part of that tacit agreement with the tariffs. I think that was part of it. I think there's an anti-American feeling going on around the world as well with countries, institutions. And so they're pulling back on US investments, which would push the treasury yield higher and the US dollar lower. So I think that was part of it, but also the basis trade. I'm not going to go through all that right now. I talk about that in my April newsletter, but basically the basis trade is when hedge funds go long the US Treasury and short the futures and with leverage. And that, with the credit being pulled out, was blowing up, which means that treasuries had to be sold, which pushed yields up, as well as the yen carry trade unraveling a little bit last week. So we saw a lot of different factors taking place. And Trump had to step in, basically. Now, is it going to continue? Well, we always talk about buy the dip investors for equities. When the stock market goes down 10% or 20%, this is the time to buy the dip. Well, bond investors are the same, so we could see the same reaction, that they all of a sudden start to buy the dip and say, okay, it's pushed way too far, we can step in here. So it's going to be interesting to see what happens this week on the yield. If we do see institutions or countries like China continuing to sell in the market, which is a possibility, we could see the yield head even higher though. So it's going to be something to watch out for. To complicate matters even further, on Friday we saw the White House come out and make an announcement and say that they were exempting semiconductors from the tariffs and some other electronic goods. Investors were speculating about a strong rally on Monday morning. And on the weekend, we saw some of the administration come out and say, well, it's not an exemption, it's a pause, because what they want to do is put the semiconductors under the sectoral trades, or tariffs. And they gave a whole bunch of justification for that. So the tariffs are still going to be there. And that caused some confusion around this once again. And then Trump on Sunday night came out and said, well, actually, there is no exemption. It's still 20% for the tariffs for semiconductors. So it's been kind of like back and forth on this exemption, not exemption. Once again, we've seen this before. A lot of confusion. And I think what the Trump administration is trying to do with this whole process, is they're trying to manage how much tariff capability they can put on the markets. They want to put as much as possible. When the market reacts negatively to it too far, they don't care about the stock market. Everybody talks all the time, says, oh, they're going to step in at the stock market. They've made that very clear. Scott Bessent, the Treasury, and the Treasury keeps saying, we don't care about the stock market. It's the bond market that they care about. And so they're going to try and manage that process, but they need to be able to control the process. So when they start taking action, if the market's too negative, they're going to have to step in and say, okay, we're going to make a concession. And then once again, go back and do it again. Now, we've seen this before, not with the government, but with the Federal Reserve. The Federal Reserve does this all the time. This is just part of their modus operandi. If they want to lower rates, they'll talk about, well, we're not going to do it too fast. And they'll start talking about how strong the economy is, and they'll lower rates. So they're taking action, but they're talking about not taking action. And so they're trying to manage that process, which is called job owning. And I think that's what's going on with the White House. Is I think they're trying to manage this process. And it is causing a little bit of confusion here. So I don't think this is all of a sudden like, hey, all of a sudden we're going to move back to this world where we're taking off all the tariffs and let's start all over again. I mean, we've had a couple of resets here. They can't do that again, I don't think. I think they're going to have to move forward, but I think they're trying to manage that process so the markets don't take it down too much. Sunday night, the futures markets have just opened up. The S&P 500 with the futures is 0.5% higher, which means nothing because it could change in a few hours, especially if there's more announcements, and definitely by Monday morning as well. I expect the market really, I think we saw that big burst last week. We've seen the characteristic for the market, for the stock market, to be really not have sustained rallies or sustained drops. Is they've been really sharp one way or the other, and this is going back in 2024 as well. So we might see the market settle down here a little bit. We do see the options expiry day on Friday, which tends to be volatile. I expect the same thing to happen this week. We do see more earnings coming out. We saw earnings last week from the banks come out. JP Morgan had fairly decent earnings, but overall in the sector, they weren't that great, at least investor reaction to the earnings, which is the most important thing. So we are getting into the earnings season. We'll have to see how markets react to the earnings as well. But unless we see something else big come out, here another big huge announcement take place, which happened last week, and it could happen again. Once we see that, I do see the markets trying to stabilize here a little bit. It'll be interesting once again. Thank you very much for joining me.